G'day everyone, and welcome to the ISM Manufacturing data. Well, it's been an interesting sort of start to the day. We've seen a fair bit of US dollar weakness across the board. The trouble in Syria. There's been a fair amount of a fair few articles written just about the who's been sort of sending test missiles and who hasn't. So there's a fair bit of craziness going through. You've got the some sort of the same sort of activity which is going on. The currencies going on here again. As you can see in the euro, this is once again we are through just the process of having a look at what's affecting what. Euro is let's try this out. Let's say 60 days, 3 months. You see euro just sort of pushing through the this sort of key level here on the downside. This once again sort of coming down. It's doing a fair bit of work here. It's not really racing away with it, but it has sort of started to trigger off through that sort of support line. So just as I come back across, what we're trying to do is just work out exactly what momentum is happening across the board. So you get some dollar strength there across the board in euro. I just zoom in here. Let's go back here to the chart and something else to the symbol. 3 months. Let's go 30 days. As you can see here, the Aussies had a bit of a tricky sort of last sort of few hours. It's had the initial sort of spike up to 1920, down to 70. Then since then, it's sort of trading a bit sideways, but not as much weakness as that we saw in actually euro. So that's something to sort of have a look at. Coming across here to sterling, and sterling is very similar to the Aussie dollar. Basically, we're seeing the usual spike up and a little bit of sideways activity. But what we do have is resistance to the top side and support at the downside, something to actually really work with. But just taking a quick squeeze of that. We're on the daily chart there with it gives us the levels a bit more. If you go back into the hourly charts and actually look at the sort of the key levels here, we are still looking at on the downside. The currency is around 155.50 and 154.80 on the downside, and sort of 156.80 on the top side. So it's once again, it's sort of sterling's right in the middle of nowhere. So it's not quite prime for a great trade opportunity, but it's not far off it. All right, so sterling sideways, Kiwi as well. It has broken through that sort of key level here on the top side. Around sort of 77 to 60, and it's had the usual spike high, and now it's sort of doing the side, basically sideways activity again. What's happening with the usually one of these political situations like Syria? It has the impact of unsettling the market. A lot of people will take a lot of money off the table. You see rushes of US dollar strength as the safe haven as it gets closer to sort of sending off missiles, and then once there's statements and releases about who's sending what missiles, then that's where the sort of currencies actually start to sort of bang all over the place, and that really discourages a lot of people from actually placing a lot of trades. Now, just coming back to the data itself, here we go with the manufacturing PMI. So this is a good historical number. It's a good reflection of manufacturing data across the US. So this is one of the key numbers that has been very indicative of manufacturing levels across the US over a long period of history. So the number itself, once again, we're looking at this 54 number. The generally, it's always the same thing with all these data releases. Is it stronger or weaker than expectations? That's sort of what we're really looking for. With the US market as well, there's a few more other things to sort of consider. One is over here, the actual equity markets themselves. The dollar or the equity markets are up 100. Well, the Dow's at 100 points. You've got the S&P 500 up about 18 ticks at this stage. And so it's sort of, it's sort of a bit of a positive day for the equity markets at this stage. So this data will sort of potentially sort of impact that, and obviously have a trickle effect through the currencies as well. So it's a little bit, ideally what you'd be looking for is some sort of uniformity across all the currency pairs. We'd be looking for generally the dollar to be doing the same thing against all these currencies. At the moment, it's not, which is a little bit unsettling in the sense that you want to have a very good grasp of what they are all doing. They are all doing. Aussie's sort of about 60, 70 points away from sort of any major levels here. Sterling's, Euro's already gone through them. Sterling's 100 points from either side, and Kiwi here is right there in the middle of nowhere as well. So it's not ideal levels, but something we can work with. Now, so what we're sort of generally looking for, a good strong number here would indicate that the actual economy is doing much better, which would generally mean that, better numbers, better economy. The idea is that QE3, the tapering would be sooner than later. And, so then generally you would have, that would be bad for the equity markets, and we'd see the dollar rally on the back of that. So we just want to see what sort of is happening here against the equity markets. This is the sort of stage, as you're reading into these data, you can actually sort of go across, if you've got a decent sort of news service, find out exactly what's going on across the board here. As I said, a lot of these articles are written by analysts, but at the same time, it gives you a good indication of what's going on with the dollar. So you got, as you can sort of see here, the US dollar hit the highest in the month against the euro and yen on Tuesday, buoyed by its safe haven status of uncertainty about whether the United States will eventually conduct a military strike against Syria. Now, this sort of data, where the market sort of starts to go for a bit of dollar strength and dollar weakness, as I said, overshadows the actual fundamental releases, and it works for a while, and the market sort of just gets really pissed off, and then it doesn't impact at all. So, and as you can sort of see here, Israel tested a US-backed missile system in the Mediterranean on Tuesday. So what the story was initially was that the US and Israel had sort of done a joint missile testing. As it turns out, it was just Israel. There's all talks of Assad being mentioned about sort of being involved in the gas attacks in Syria. So there's a whole bunch of potential political mineshells going on over there. So, they're trying to bring Israel into the responsibility for this, and that would obviously create further political tensions across the Middle East and bring the US into conflict with Israel. So that's the sort of problem. We've got this nice manufacturing data number coming out with this in the background. So generally, because most of the currency pairs are in the middle of nowhere, any sort of particular variation here in the data will actually be better. But what we're sort of looking for is something along the lines of, general US dollar strength against the yen and the euro. You want that sort of to continue. So just to come back to here just briefly, let's get the one thing I want to have a look at. Just getting the yen up here, just have a quick sort of squeeze at the yen. As you can see, it's sort of broken through this level here. It's the other day, which actually coincides with the top of the cloud. I can just sorry. Oops. Okay, so on the as you can see, it's sort of broken through this sort of major level here. It's 98, sort of 80. It's sort of sitting out there in the middle of nowhere at 99.40. If we go to the daily charts, you'll see the actual cloud level here that it's actually broken through. If I can just get a bit more data on that. Okay, seems to clear there, 99 to 25. Now, one of the key things, I just wanted to see exactly where the, if you had actually gone through these levels to sort of see exactly if the Japanese orders have been taken out. But since it's not the Asian sort of time zone, I'm sort of not too concerned about it. I just want to make sure that the actual, those traders are covered. The dollar is sort of rip-roaring sort of straight ahead there as well. You can see it's sort of going on. Now, what we have to sort of really factor in here is, well, just change screens. We'll just go back and miss the data. I just want to see if I can place an order on both sides of the market here. Got right on the data. As you can see, the orders here are actually set. We're actually already in the cash that's come out a little bit much. Okay, the actual data itself. Sorry, I just got a little bit waylaid there. Okay, so what we've got is we've got a situation where the data itself is better than expected, 55.7. We've seen the dollar come off very aggressively. You can see what I've got in there. I think it's a situation where you just got to let the currency go and have a look across here. I can just come back across the analytical page. Right. Okay, so what we've got is the situation is the key level here is 55.7 against 54. This is another sort of situation where you get that the dollar strength will sort of shine through the. This is going to sort of work into the hand. Sorry, I'll just get these charts. I'm just sort of stuck on one of these other key currencies here. This is going to lead to sort of the dollar strength across the board. The Aussies sort of come off about 15 or 20 points just on the back of that. It's sort of a bit of a strange to get this dollar strength across the board. We should start to see the currency sort of pull back a bit on that. You're seeing sterling come off as well. Aussies drifted off on the back of this. Kiwi sort of just following the way here. If I can just zoom in here to dollar yen. Then you can actually sort of see the dollar is actually sort of increasing its gains across the board. It's one of the things. I don't think it's actually a huge number in the case of actually Syria as well, with the Aussie dollar itself being sort of right in the middle of nowhere. I don't see there's much value in sort of sitting with the position. Yeah, there has to be a big variation in that manufacturing number to really give it a push. If you're short euros, I'd be happy to sort of sit short euros. Sterling with these major levels still either side of the market, I don't see it being able to sort of push down through that. And I mean, the dollar is sort of hovering just on its highs here in dollar yen. So it's what we have seen is a bit of dollar strength. Is it going to continue on with this? I'd say probably not in the short term, just on the back of what the general news is sort of going around the place. I wouldn't be sort of sitting comfortably long or short US dollars at this point, just with the Syrian news and the actual data itself. You put two of them together, it just means probably overall US dollar strength. And that's about it. So they've, yeah, I'm sort of just having a little reaction here. Just come back, sorry, just come across the other side. We've got, oops. What we're seeing is the, I've just got the Aussie dollar up here as well. The currency sort of came back down to the sort of mid-20s there. It's back up into the mid-30s now, sort of just slowly sort of drifting off. I've just squared the position up just around at 30, sort of basically sort of just below the level where I sort of got into the trade. Yeah, and I'm just sort of trying to just gauge if the actual momentum from this is going on the back of this. Basically, there's a news release just out here as well at the same time, which is probably even more important than the actual release of the data. Senate likely to pass more tailored act on Syria. This gives the US government the US forces room to actually sort of send some missiles. This actually, as the tension picks up, it's actually a stronger dollar move. These sort of reactions are going to be happening across the board as it gets closer to a full-scale strike against Syria by either the United Nations or the sort of united forces, I guess. And that's what we're dealing with these political situations. It sort of actually makes the things a little bit cloudy, as it is, whilst the tensions are high and there's actually all this fresh news about potential strikes in Syria. The US dollar will go through a bit of strength, and the manufacturing data sort of plays into that sort of strength zone. Okay, so it's a little bit of a odd situation. I'm sort of a bit more cautious just with these news wires coming out with all the various bits and pieces. I'd be more confident if the currencies were breaking down through those actual trend lines, and you can be pretty sure about getting some better, stronger moves going forward. Since they're sort of in the middle of nowhere and most of them are contained by trend lines, we're probably not going to see too much activity until they break, and there's a fair bit of room to move on the back of that. So at this stage, I'd be just keeping an eye on the currencies. What we're really looking for here is, the Aussie dollar in particular to be going through these support level back down here. It's a good 100 points away from any sort of levels there. So I think the Aussie GDP data is probably much worth a better opportunity than sort of getting short mid-range in these levels. Okay, guys, any sort of questions with regards to the data itself? Yeah, so it's one of those weird ones. Basically, as I mentioned, just the ongoing political cloud that's hanging over sort of the Middle East there is creating a little bit of uncertainty in the currencies. It'll create a lot more volatility as well as we go forward. And as you can see here, the Aussies just sort of jumped up on 10 points. It's just going to have this whipsaw price action as the fresh news comes in, dollar strength, and 5 minutes later it comes off again. So it's not it's pretty unsettling as far as being confident with the direction of the currencies on the back of the actual data. It's actually been driven by more fear and the news media that's the hype around the Syrian conflict. All right, guys. Well, that's pretty much it for now for this sort of data release. As I said, the currencies are sort of moving back to where they came from. There isn't a huge amount of variance in the data. I think some of the move is probably more at the news releases that ain't coming out at the same time. Yeah, we'll wait and see. We've got the Aussie GDP data tomorrow. That's probably a better release, and should actually be less political tension around once the US market sort of closes. All right, that's pretty much it for now. We'll be back tomorrow and having another look at the key fundamentals. All right, well done, guys.